Hi guys, this question is an extract from the KZN prelim for the year 2024. And in here, we seek to calculate certain amounts that relate to depreciation. All right, so make sure you have this paper, do it first so that when you watch this video, some of the calculations may make sense for you. Remember, we prepare these calculations for both paper one as well as paper two because your fixed assets can be tested in paper one as well as in paper two. So to begin with, we're going to calculate our additions here, which is A. That one was a bit simple. And to get your A, you would now say your cost at the end, which is 1.9 million, your cost at the end, which is 1.9 million, minus your cost at the beginning, which is 1.1 million. That will give you your answer here, which is 800,000. That becomes your cost at additions, your additions at cost. That is your 800,000. Okay, let's go to the next calculation, which is on vehicle number one. All right, so I want to emphasize, let me bring my board here. When you calculate your depreciation, it is very important to remember when you calculate your depreciation, very important to remember the sun. All right, that is, you calculate your depreciation for your sold, for your old, and for your new. Okay, so let's come to vehicle number one. Here is vehicle number one. We are told that the vehicle has a cost price of 500,000 and accumulated depreciation of 450 and the date of purchase 1 September. Already here, I can see there are certain clues which are leading me somewhere. Okay, let me see. If the vehicle has a cost price of 500,000 and it has accumulated depreciation of 450,000. That means this vehicle has a carrying value of 50,000. That is its carrying value. That means its accumulated depreciation is almost closer to its cost price. It therefore gives me a sign that I might be tested on the 1 rand residual value. But let me see. When I look at the date of purchase, 1 September 2018, I can see that this vehicle is old. That's the second clue that I might be tested on the 1 rand residual value principle. And then I go on. I'm now told that vehicles are depreciated at 20% per annum on cost. On cost. So that is the third clue to tell me that here I might really be tested on the 1 rand residual value principle. Let me see. If I calculate my depreciation, I know that my depreciation is on cost. So I'm going to take the cost, which is 500,000. And my rate of depreciation is 20%. And I know it's 12 over 12. So I'm going to punch that onto the calculator. And I'm coming here to say 500,000. All right, 500,000. Multiply that by 20%. And my depreciation is going to be 100,000. So if I come here and I now say my cost remains the same, I'm going to show you a second calculation. My cost remains the same, 500,000. And my accumulated is now 450 plus this 100,000. That makes it 550. So my accumulated becomes 550. Okay, my accumulated becomes 550. It therefore means I now have a negative carrying value of 50,000. A negative carrying value. That therefore is wrong because you can't have a negative carrying value. So it automatically means I am being tested on the 1 rand residual value principle here. Now, the moment you figure that one out and you must calculate depreciation, you will now say your carrying value at the beginning minus your depreciation will give you carrying value at the end. Okay? Carrying value at the beginning minus depreciation must give you carrying value at the end. My carrying value at the beginning, remember, it was 50,000. So I'll take my 50,000 here, carrying value at the beginning. Minus depreciation, I don't know it as yet, but I know that this asset has to have a carrying value of 1 rand. So I'll now come and I'll say my 50,000, which is my carrying value at the beginning, I must lose value to depreciation, but I must remain with 1 rand, which is my carrying value. So my depreciation therefore becomes 49,999. That becomes the depreciation value for vehicle 1. Okay, so let me come and put that on vehicle number 1. So vehicle number 1, my depreciation is 49,999. That is sorted. Let's come to vehicle number 2. Vehicle number 2, we are told vehicle number 2 date of purchase is 1 March 2022. And vehicle number 2 was sold. Now we're talking disposal now on 1 September, and it was sold for cash. So let's calculate its depreciation. Let me go back again to my board here. That will make it very easy. Okay, so when I calculate depreciation for vehicle number 2 now, for vehicle number 2, when I calculate its depreciation, I know that my vehicles are depreciated at 20% per annum on cost. So its cost is 437,500. There is the cost. And my rate of depreciation, remember, it's given here, my 20%, 20 over 100. Now, the next aspect that I need is the time that I had the asset for. When your vehicle is sold, you will calculate depreciation from the beginning until the date of disposal. From the beginning, I'm talking about the beginning of the financial year. In this question, we are told that the financial year ends on the 28th of February. That means it begins on the 1st of March in the year 2023. So I'm going to count from March, April, May, June, July, August. Do I count September? No, because it was sold on 1 September. So I don't count September. So I end up with 6 over 12 months. I end up with 6 over 12 months. So I'm going to come here and I'm going to say 437,500. 437,500. Are you still with me? That's 437,500 multiply by the depreciation rate of 20%. Okay, and then I'm just going to say divide by 12 and then multiply by 6, which is the same as multiply by 6 over 12. Then I'm going to end up with 43,750. So my depreciation is 43,750. That is depreciation for vehicle number 2. So I'm coming here, my depreciation is 43,750. That is depreciation for vehicle number 2. Okay, I know that further down there is a question that is going to be asked up on this vehicle. Here is the question that says, calculate the profit or loss on the sale of the vehicle. Calculate the profit or loss on the sale of the vehicle. That is very easy to calculate. When you're calculating the profit or the loss, the examiner wants you to determine whether it's a profit or it's a loss. It's simple. You simply say the selling price at which we sold the vehicle, then you subtract the carrying value, and then it will either give you profit or loss. If the amount on the calculator is positive, it's profit, but if it's negative, then it is a loss. Let's see. We are told here that this vehicle was sold at 320,000 here. So I'll come here, my selling price is 320,000 minus the carrying value. Let's get the carrying value. To get the carrying value, we'll now say the cost of this vehicle, remember, was 437,500. And so far, its accumulated depreciation that we were given at the beginning was 87,500. and it has lost value in this year, and the depreciation is 43,750. That will give me my carrying value. Okay, so what I want here is the accumulated depreciation, where I'm going to say 87,500 plus the 43,750. So it's the 87.5 plus 43,750. That will give me 131,250. So here my accumulated is 131,250. So I can then say 437,500, 437,500 minus the 131,250, which is my accumulated. It will give me my carrying value, which is 306,250. 3 or 6, 250. Remember again what I did here. I simply said cost minus accumulated depreciation is equal to carrying value. And my carrying value is 306,250. So I can come back here now and say my selling price is 320, but I now have my carrying value, which is 306,250, and I should get either profit or loss. On my calculator, I'll now say the selling price, which is 320, 320. Then I say minus the carrying value, which is 306, 250, 306, 250. And then I end up with a positive amount. You can see on my calculator, it is positive. It's a positive 13,750. A positive. Once it is a positive figure, it is telling me that this is profit on sale. Once it is positive, I know I am having profit on sale. So I'll come here and I have my profit of 13,750. Okay, so let's come back to depreciation for vehicle number 3. Remember what I did here? I was calculating depreciation for vehicle number 2, but I remembered that there's a question which has to do the profit or loss on sale. And we devised a formula to say selling price minus the carrying value is equal to either profit or loss, and then you trust on your calculator. Cool. Let's go to the next one. We're now on vehicle number 3. All right. So remember, we are doing our depreciation calculations here. Let's go with vehicle number 3. Vehicle number 3 is a new vehicle. Remember, the Sun sold old, new. And the new vehicle has a cost price of 350,000. That is the new vehicle. It is a cost price of 350,000. And depreciation is at cost, remember, 20% per annum. All right. So for the new, we calculate depreciation from the date of acquisition, from the date we acquired, we bought the new asset. That is from December until the end. Remember, the year is ending on 28 February. So we're going to count from December, all right, 1 December, January, and February. So we only have 3 over 12. Okay, so I'm coming here now to say my 350,000 over there, then I multiply by 20%. Okay, then I'll simply divide by 12 and I multiply by 3. And then that's going to give me 17,500. It gives me 17,500. So already I'll come here. My vehicle number 3 is 17,500. Do not forget to add these amounts, because you must add these amounts to get your answer here. There's a column here given for you for the answer. You must bring your answer there. And what do you bring there? You bring your 49,999. Then you add your 43,750. And then you add your 17,500. And your total becomes 111,249. 111,249. That becomes your B. 111,249. That becomes your answer for B. Okay. And to get C, remember already we got the disposal at carrying value. How much was the disposal on carrying value? We calculated it already here. If you still remember, we said the cost is 437,500. So to get the calculation, for carrying value on the vehicle that was sold, you take your cost. We did it already. It's 437,500, and you subtract the accumulated. I showed you how to get this one, which is 131,250 minus 131,250 minus 131,250, and it gives you your 306,250, and then you end up with 306,250. Remember, we did this one when we were going to calculate our profit or loss on sale of asset. Okay, and then the last one becomes D now, which is your cost on equipment. All right, your cost on equipment there. So this one is quite easy. There is a rule here that I can teach you, that there's an arrow going up and down. When you go up, you minus or you subtract, but when you go down, you add. Okay, so what that simply means is, if you want to get your D here, which is the cost, you simply look for the like terms. You look for the like terms, and the like terms here, it's cost, additions at cost, and another cost there. So you are now simply saying you have your 300,000. You have your 300,000. That is what you have here at the end, and you're going up. So you're going to subtract minus the other like term is the 120 minus the 120, and therefore it will give you the cost at the end, and that amount becomes 180,000. Okay, so this was a very familiar question. I think some of you are already saying, yes, Mr. Simbi, I've seen a question with similar calculations in the NSC paper. So if you have seen it, please go and look for that paper, and I would encourage you to continue doing the calculations. Watch out for the next video. Until next time, goodbye.